Recording bugs. Hey guys, how's it going? It's your boy Nick Houtx trader coming from Houston, Texas. Hey guys, today we're going to look at the market, look at what it did, what we think it's going to do, and we're going to look at gold, US 30, and NASDAQ. If you guys like this video, please do me a favor and smash that subscribe button and also hit that big old thumbs up, that like. Okay, guys? So let's get right into the charts. Let's not waste any more time. Here we go. Okay, let's see on the old dirtiest of 30s. Guys, earlier in the week, excuse me, last week on Thursday, we were anticipating this sell off right here, and we were wanting to get right into this zone. So we called the trade perfectly. Unfortunately, the it wicked up and took us out of that trade because of the Good Friday long weekend. There was a gap on my broker, and that gapped up and took me out. And then it just absolutely melted, did exactly what I thought it was going to do. Unfortunately, I did not catch that trade because after it gapped me out, I said, hey guys, I'm just going to be patient on this. So I am currently in a US 30 long from here. As you can see, my main strategy, and let me just delete a couple of these fibs and we'll start from scratch. So my main strategy on US 30 and NASDAQ and on gold is this. Okay. I want to see where the move is. Okay. Let's draw the arrows here. There's the move. There's down. And really, I mean, this is technically a higher high, but I think that is just pure manipulation. This was supposed to stop right here and then give us the second leg down. Okay. So what I want to do then is I want to see this is liquidity. I want to see this liquidity get taken out and then find my fib level. I'm going to go ahead and draw it from here. Find my fib level. And I like to take trades at the 88 and the 78.6. I mean, really, yeah, we'll just leave it there. Okay, so that is exactly what happened. Okay, I'm in the trade right there, just above the 78.6 on the second leg. Now, a lot of times I like to measure the second leg, the downward push, and find out where its extension is to really catch the big reversal. So, either two things are going to happen. Either this is going to push, or three things. This is going to push up, find resistance in this area, and then set another low. Okay, it's option one. Option two, it's going to go to the moon. Option three, it's going to sink. All right. We don't know which one it's going to do. We've got three different options, but we are going to play, what we can do. So let's draw one more fib. We're going to draw it from the bottom of here to the top. Okay. So if this is truly, we can delete this for now and we'll delete this for now. If this is truly that second, so let's drag this back down. All right, right there. If this is the second leg, we draw that to top to bottom. And let's say we get some sort of pullback. Okay, we can look to take profit right in this 88.6 area, right? This consolidation area for this third leg. The third leg would then have a TP at this 23.6, which is also right there by our 88.6. So that would be where we were going to get back into more buys if this doesn't pop off. If this doesn't just leave the market and take off, then we'll get into more buys right in this area right there. Our stop loss will be right there, and we'll target the top. Okay. This is, as far as I'm concerned, that's still liquidity because that's a gap open. I don't really like it. That's more like a double top than it really is a liquidity grab. So yeah. So for right now, we're in longs. If you're not in longs right now, you can definitely get in longs and you could play this Fibonacci right there. And so your entry would look something like this. Now, I see this order block. The reason why I like this is because this is an order block and it left. Okay. I mean, this is the order block that it's retesting. So we're playing the retest of the order block after the liquidity has been swept and you have the oversold on the RSI. So that's a good trade, right? Look at the divergence. Lower here, it's getting weaker on the RSI, but at the same time, the price is getting lower. So it is divergent on the 30 It is divergent, not divergent on the hour, but it is oversold. So with our strategy, we need a fib zone, which we're in. We need liquidity taken out, which we've done. We need 1 hour divergence. Excuse me, 1 hour oversold. What it is, 30 minute is then divergent and on down from there. The rest of them from there are going to be obviously be divergent if the 30 is divergent. So we have pretty much everything we need to take that long. It didn't really, I mean, I really would like to have rejected 88.6. It came lower. So as far as risk to reward is concerned, I mean, your TP1 is going to be this top right here. I mean, we're looking at a 4.5 to 1, 4.28 to 1 if you take that trade. So that's a good trade. That's a good trade. If it breaks and knocks us out, which it's a possibility, then we could be looking to get right back into more entries right there, which is super close to where our stop light is. I know it sucks. It is what it is. So that's the game plan now for that. And then if you're one of the people who are trying to look for sells, know that this will probably push up, close in this fair value gap. Look at this kissing candle right here, close in this area, but then before it takes off. So we can catch at least those pips, hopefully. Um, we'll at least try to catch these pips, if nothing else. All right. So that is US 30. NASDAQ. Man, I was put in a tough position today, as you guys might have seen the live trading. I called out this bottom here with this block, but I ended up just closing the trade. I actually took a loss on that trade because I didn't want to over leverage my account and go into too much drawdown. So I called that off. And then as soon as I took that L, it popped off. Let's see. Look at this 61.8 on this extension. So that's a good turnaround. But here's the deal, guys. I don't think it's done. I don't think it's done. After looking at the Fibonacci's and just regrouping today after I took that L, I really think that this is the area, right? I really think that that's the area we need to be buying in. Now, this area could be, the order block that it's retesting, which is doing, and it rejected. But I'm going to save my bullet now for this bottom area. Now, if we look here, we finally got on the 1 hour, the oversold, but it just hit it right there. It popped up. So let's see if we can't get one more dip lower than this to give us some divergent on the 1 hour. So we'll wait for that. And we also see that there's a kissing candle in here in the 1 hour. Okay. You could also consider this a fair value gap. I would consider that area right there a fair value gap. But what I really like to see is I see this as a kissing candle right here. Some people call that, I don't know if they call it that, if that technically is a breaker block. I don't think it's a breaker block, but that's my kissing candle right there. So if I'm really going to try to get in some crazy snipe entries, then perhaps I'll drag this way over to there and then use that. And so what I mean by kissing candle, guys, if hopefully you can see this better, is if we zoom in, it's this candle, these two candles right here. And I'll overlap those two candles right there. Right. And the reason why I like those is if we go to a smaller time frame, let's go to the 5 minute. Let's zoom way out. Okay. So you see there's that little block that I had. I know I'm doing a lot of scrolling. Just stay patient with me. That little block, there's buy candles and there's sell candles in there. So you see these sell candles. You see this sell candle area here. Those are little sell candles there. So these sell candles have not been retraced and haven't been taken. I call them virgin candles. They haven't been touched. Right. So really what I want to do, if I see now, let's look at this. This bull candle has been retraced by these two bull candles there. Okay. So this one does not count. But this one, however, does count. These two bull candles have had nothing come back and touch it and go. These are virgin candles. So what we can do then is we can get this little box and tighten that up just a hair because we know that right there is those two candles. Okay. So let me delete all these paintbrushes. Matter of fact, it'd be easy to just do it this way. So there's our little area. All right. That's where I want to get this wick to come back down to find my entry. There's a 786. There's the 88.6. So we come back out. Let's reset the charts. All right. There's our little block. There is where we need to find an entry. So I'm going to set a limit there. I'm actually traveling tomorrow, so I'm not going to be able to manage this trade. I'm going to set a limit there, and I'm going to set my risk appropriately. And there, that's my trade. Okay. If we come back out, let's say the 2 hour, reset this up, and let's see what we have. All right. We have a down. We have a down. We have a up. One leg. We have a down. We have it up. That's the two leg. There's the third leg. So it could do one of these and go, okay? Or it could do one of these and go. I would rather see this one. Since I didn't catch that entry, I'm going to hope for one more entry right down in this area, like I just showed you. And then our stop loss is always 10%. And then our TP is going to definitely be these targets and this top right here. This is liquidity. This is what we're wanting to get taken out. The market is going to want to hunt this area. All right. And so just like that's liquidity, this area down here was liquidity and it just got hunted and taken out. So we need to find that turnaround. Hopefully, we get one more dip and this isn't the very, very bottom. Because if it is the very bottom, I feel like an idiot because I had to close that trade out. But again, I wanted to protect the count. I didn't want to over less because I took some L's and I already had a 30 going. So it's like, you got to pick your poison. Goldilocks. Okay, so here's the deal. This is obviously very bullish. And so I knew damn well when I called this out the other day that this is just risky. I mean, this is pure risk, right? It broke, showed that there was some strength of sellers to come in. It had the 88.6 on the 1 hour and even the 30 minute. You'll see that it had these wicks and it was trying to reject. And so I took a sell there and then it went against me. I closed out. I didn't even take a full stop loss hit on that one. But that's just not smart trading. And that's on me. I was willing to be a little risky at the time, thinking that maybe we'll come down and we'll retest this area. I still think this area is going to get retested. I mean, that's the top here. We have a huge fair value gap. I mean, really, we've had this candle, but let me zoom in here. A little easier to see, perhaps. All right. The way I look at fair value gaps. Okay, so there's different ways of looking at it. Let's draw some squares, triangles. Okay, some people would say, well, you got the top of this candle and you got the bottom of that candle. There's the next wick, but you'll see you've got this wick here taking that out. So I would say, your really fair value gap is between the top of this candle to the bottom of that candle. That's really it right there. All right. And then again, you've got another one. That's actually not much of a fair value gap because that's the bottom there to there. So that doesn't really count for nothing. But it also, guys, it depends on the time frame that you're looking at because really, I mean, you could say, well, there's the last sell candle and there's the next one, this whole area right here, right? So your fair value gaps really depend on what time frame you're looking at. I just like to see healthy market flow, right? And for me, this is a candle that came down. It's right here for me. All right. Again, it's not an exact science. You have to look at the market and see where you think it is. So some people would do this and say, well, it's right there, top of this candle to the bottom of that candle, there's your fair value gap because it just took off and you really didn't have any sort of retracement except for this one candle right here that gave you the gigantic wick down, right? That's the only one. So you've got an area that's there and then your next sell candle is here. So for me, that's kind of the fair value gaps inside there. Anyways, that's a little spill of fair value gap, so it's probably not needed. What I was trying to say was it was just a dumb trade on my behalf. It was just risky. I understand. There's no sort of structure being broke. We can't sell until it breaks structure. And so we're going to need to see up, a down, a lower high, then a lower low, and then like this. This is the structure we're going to need to see. And so what we can play then is once it breaks this area, once it breaks this structure or even this structure, this, preferably this, right? Once it breaks that structure and then it sets a lower high, then we're like, oh, hey, now look, it'll break that structure again. And we play the second leg, right? We'll play the second leg. We'll get in Goldilocks of the 78.6, and that'll be our trade right there. And then Put our stop loss right there, and we'll target the TP extension, wherever that may be. Hopefully it's all the way down into our buy zone, and then we turn around, we flip, and then we buy. Okay. So for now, there's not a whole lot we can do because it's just so bullish. Yeah, it's really, for me, I don't see any way to trade that. Okay, so that's what I'm going to do. I'm going to put in a on Nasty Nas. I'm going to put in a limit there. My target is the red line. All right, kind of a large stop loss. Just don't over leverage. It's a 3-to-1 trade. But again, if you hit that and it starts getting to profit, you start moving the stop loss up a bit, right? I mean, some people would even say you put your stop loss right there because if it breaks that, I'm not playing that game. I'm going to leave a normal stop loss, which is 10%. And, if it rejects and starts pushing off, then you can do what you got to do on that. And then on dirty 30, we're already in a trade. My stop loss is right there. And if I lose that trade, then I'll come back next week. I'm going to be out of town Wednesday, Thursday, Friday. I get back Friday night. So that is it. Okay. If you guys need help with Fibonacci's, please look at this video right over here. If you're a new trader and you don't understand any of this, maybe you want to set up a broker, please look at this trade, this little video over there. Hey, I'm going to also, I have a dot card. Let's look at the dot card real quick because I have links to some cool stuff on here. Let's go to the dot card. And this is my dot card. All right, guys, this is the YouTube you're watching, my Twitter, my Instagrams, my Flash Funding. This is the funded account company that I am currently using right now. Pip Connect is a Discord that I'm in. It's a paid service. Bored Ape Solana Club, go buy NFT. You can get on their Discord. Market Bandits is a free Discord, and Badass Trade Talk is a free Telegram. If you're a Telegram user, check out one of those. And really, guys, right now, I'm just trading funded accounts. I'm not even doing my ETF style stuff. I stopped using MetaTrader. I stopped using offshore brokers. Um, Going the full legal game. Okay. So appreciate you stopping by. Thanks for watching this video. If you have any questions, please comment. Please, please make sure you smash that subscribe button. I need 500 subscribers. We're halfway there. And let's try to get this channel to get some traction. So we'll stop sharing the screen. All right, guys, I appreciate you very much for stopping by. You guys have a good night.